It has been a momentous week for shareholders of Apple Incorporated. After an earnings announcement that did not quite meet the market's expectations, the shares of the world's most valuable company by market cap, until today, took a 10% drubbing and continue to fall. Does this quarter's earnings report mark the permanent demise of one of America's most iconic corporations? Is this growth story over? Does the nearly 40% drop in shares from its peak a few months ago represent an accurate estimate of the company's value? For those of you who have not been following this story closely, Apple's profit growth has stalled, even though last quarter's top-line revenue growth was robust. What was perhaps more disturbing to the market is that the company reported lower revenue estimates for the coming quarter. As one commentator in the Financial Times opined, any news for Apple will be perceived as bad. Any success will be viewed as unsustainable. Any failings will be further evidence that the company can no longer grow at anywhere near its historic growth rate. In fact, both of these perceptions may be over-exaggerations. As Apple grew to be the largest company in the world by market cap, it would have been impossible to continue that rate of growth into the future. In terms of growth projections, companies rarely grow in a straight line. It is true that the markets Apple has dominated are increasingly competitive. It would be natural to expect some margin compression. Apple's stock price is cheap, especially when you strip out $137 billion of cash on their books. So is this the time to buy? Perhaps not, since we seem to be witnessing an emotional reaction to the stock. Momentum will likely carry the stock lower. As Buffett has said, don't hold a stock if you can't watch it drop by 50%. I'm Tony Ogorek.